in our online text editor.
I don't know how long it'll take to come down, but clearly the momentum is down on inflation.
Yes, they are coming down, but I think are very far away from the Fed's objective.
When we look at other measures of inflation, there's still a lot of work for the Fed to do.
If the economy is slowing and if inflation's coming off, they want to be sure they're on the right track.
I think the Fed looks at this as the beginning of their battle and having been more credible, but having more work to do.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. Lisa, I formally appoint this Reallocation Friday. Everybody out there's got to rewrite for the weekend. CPI, wow. The jobs report was wow. Retail sales next week, that's going to be wow. Everybody has to adjust.
So, Tom, you're going to pull the trigger out of a triple leverage all cash into reallocating into Bitcoin or, say, all big tech? I mean,
I'm going to take a risk. Fractional shares of Apple maybe is where I'll go.
My point is, when do you get in? When do you see the bottom? How far out do you look? Do you look out a month? Do you say that this rally could continue because of technical reasons over the next 3 weeks? Or do you start preparing for that yield curve inversion signal? Yes, it's gotten less inverted, but still signaling a slowdown that some people say hasn't been priced in.
We did this with Ron Temple in the last hour, Lazard Asset Management. David Leibowitz will be with us here in moments with JP Morgan. Really looking forward to this raging debate about what to do here. And what to do here, Lisa, is always the fixed income market leads the way. Is the fixed income market leading equities now?
Right now, if the fixed income were leading, it would send the same signal, at least if you look at credit, that equities is signaling, which is if we get any kind of downturn, it's going to be shallow, and the resilient companies are going to remain resilient and are going to be able to pay their bills. And that is why you're getting the biggest inflows into investment-grade credit going back to September 21. I do wonder, though, why are we still seeing yield curves inverted? Why are we seeing such low, longer-term yields if people believe that we do have, some sort of soft landing ahead that we can then revive from? And so these are some of the conundrums baked into the bond market that's not telling a consistent story.
Let me steal from John Lemire over at MSNBC. Way too early. Kaylee Lyons is the queen of way too early, in for John Farrow today. And Kaylee, you're doing a more European show than we are. Is there a belief that the hydrocarbon disaster of Europe can move over to the United States?
I think there is a sense, Tom, that the United States is going to be relatively more interested or insulated. But obviously, Europe is dealing with a substantial energy crisis, one that is poised to potentially get worse beginning today when part of the Rhine River becomes impassable for cargoes of things like coal and diesel.
Let's walk through this. I mean, I don't need a tour guide here. You know, I'm scheduled to take the tour in 2025 to go castle watching. But the bottom line, Kaylee, is we can't get coal, so nat gas goes up, right?
Exactly. And that is the problem that Europe is facing. It is an energy-driven inflationary shock in Europe, one that central banks, the ECB, are poised to do very little about on the supply side, and yet they are still trying to hike rates into a European economy that is weakening due to the very same energy crisis and the high cost of living.
Lisa from the Upper East Side emails in and says, get to the data check. I got to do the brief. Futures up 13, Dow futures up 99. The VIX under 20 was a big deal for me. Still 20.19 shows a resiliency of equities this week. Fixed income, it's gyrating.